Hello again, everyone. In this technical analysis of the stock market video, I call it Attack on FAANG Fortress, because that's exactly what happened yesterday as all the FAANG stocks got hit fairly hard. All right, we're going to take a look at the Nasdaq Composite and the Nasdaq 100 today. Another one of my indicators at the high yield bond fund, and then check and see how the FAANG stocks looked. We'll touch on Facebook, Apple, Amazon, Netflix, and Alphabet. All right, let's start off here with the weekly view of the Nasdaq Composite. It was down 188.9 for this last week. Looks like a reversal type candle in here, but you need follow through. It is similar, although bigger than what we had at the high over here on the week of February 16th. So again, we'll see what kind of follow through we get this week. When we look at the daily chart, here's what I'm looking at. It has struggled to stay above that all-time high in February. We got above it, pulled back down, came back above it, and now we came back down strong on Friday. And it's interesting that this week we had 3 out of the 5 days were up. Monday, Tuesday, and Thursday were up days. But we ended up very negative for the week, with Wednesday and Friday being pretty strong to the downside. Now, what am I showing here? I think we're getting ready to roll over in here. It's sure acting like it. It is losing momentum and it is losing strength. What these are advancing and declining numbers. So advancing versus declining numbers in here, ratios. But I'm looking at the up days only, so I'm ignoring the down days. So what I'm trying to do is measure how strong were the up days in this move. Now, this was a 3-day move in here. Fairly strong as it kicked off that bottom back in March. Okay, then we had this next push in here, and the whole sequence of this push of the up days averaged 2.56 in terms of advancing to declining stocks on the up days. Then it weakened even further in the next push up over here in May, late second half of May, basically. Here was the low on May 14th, right here. Okay, and this push up here was only 2.04 to 1 in terms of advancing and declining. And then this last push from June 15th into the high on June 23rd, right here, was only 1.74 to 1 on the advancing and declining. So it continued to weak. Okay, and here's where that data comes from. You look over here at the spreadsheet I've got, which has got all the advancing and declining issues. I get it from my data source and I record it over here in the spreadsheet, but then I always confirm what the finals numbers are on the from the Wall Street Journal every night. And so here's the numbers on the Nasdaq, and you can see where we're doing the math and looking at those legs in here. And this data is what feeds the McClellan oscillator. And yes, we have the McClellan oscillator on the Nasdaq at minus 153. This level right here indicates minus 150, which is considered to be extremely oversold. And you can see we can get well below that, but we are right at it, just slightly below it. And over on the New York Stock Exchange, we're a little bit further below it, down here at minus 210. Okay, so that is the picture, and that's where the data comes from, and that's what I was looking at in terms of these legs. Okay, let's take a look at the Nasdaq 100. I wanted to just quickly show you that it's literally almost the exact same picture. So I really spent a lot more time analyzing the Nasdaq Composite. It's one that's talked about, in the news most frequently, but when you look at the picture in here, it's almost identical. Okay, here's the daily chart, and when you look over here at the weekly, it's the same kind of picture, same exact formation, same divergences that are showing up, not confirming the move higher in here. Same thing that's happening here on the daily. Okay, so let's take a look at the Nasdaq Composite on Elliott wave perspective. Okay, here's that weekly chart. So I continue to believe that the high that we had here in February was the end of a fifth wave. Now, the way we've got this labeled in here is that we've had this fourth wave in kind of a combined WXY type move, 3-wave, an X wave, and then a triangle for wave Y in here, A, B, C, D, E, and then a push for wave 5. The thing I don't like about it is it makes this fifth wave fairly short, but other than that, it fits pretty well. Now, the other thing about this, and I maybe have talked about this before, is the move that we had down out of here in terms of this big push in March and the big sell-off. That was the most oversold that we got on this RSI since 2008. Okay, so we on any of all this entire period, we never got as oversold as we just got right now. And look at the beautiful channeling pattern that unfolded throughout this entire move from 2009. So that's why I think something different's going on right now. I think we're in a big corrective pattern. The fact that we've pushed to a higher high in here is very deceiving, I believe. And I think what we're doing is a large flat. So at a minimum, you know, we've got an A, B, and then we're going to come down in a C. This should be a 5-wave move. It's at a minimum going to come down to test the bottom that occurred back here in March. Okay, what is this right here? The week of March 22nd. But many times a wave C in a flat like this can go well beyond the length of the A wave. Okay, so it could go a lot deeper. Here's the low of the fourth wave. Okay, so here's the low that's that December 2018 low. Okay, I wouldn't be surprised to see it come down at least to come to that and test it. But that's my best take right now on what's going on. And we'll see how things unfold and see if it continues to move to the downside like we're looking for. All right, let's take a look at one of the key indicators we look at every day, the high yield bond fund. HYG was down $1.54 for this last week. It was down 78 cents on Friday. It sure looks like it's starting to roll over. We broke this multi-month trend line in here. Moving averages are crossing to the downside. What I'm really looking for is to this come down and take out this May 14th low. That's pretty key. It's pretty key with all the major indices as a part of a move to the downside. We've got to get it. So far we're triggering. We took out the June 15th. Actually, this is June 11th low, but this is the next target in here. And that's we continue to watch this because right now this is signaling risk off for the market. All right, let's take a look at some of those FAANG stocks, starting off with Facebook. Actually, before we do that, I just want to remind you to take a look at my website. Head on over here to joehenches.net. Check out the website and the membership. If you like this kind of information, we talk about this in detail every day. All right, everyone. Now, let's take a look at Facebook. Here's what happened on Friday. We were down. Let me see if I can get this to cooperate. $19.60 on Friday. Big move down. The dotted line is the prior high, okay, from January. We were bouncing around, holding fairly well, and then we just smashed back down through it. And when you look at the weekly chart, that looks pretty negative in terms of a bearish, almost totally engulfing, but pretty bearish looking candle in here on the weekly chart. Let's take a look at Apple and then Amazon. Here's Apple. This is getting a little delay coming in. When I look at the weekly, well, let's look at the daily first, okay? We were down, golly, let me slide it over, down $11.21 on Friday. Okay, we're getting divergence. That's showing up on the indicators, not confirming that last thrust up this week. And look at this beautiful shooting star pattern for candlestick on a weekly basis, up $3.91. Typically, you see this kind of pattern at tops. Okay, so we'll see what kind of follow through we get again. Now, let's take a look at Amazon. Amazon, very similar to Apple. We're getting divergence showing up in here. It was down $61.71 on Friday. Not closing below that 10-day moving average just yet, but we are getting divergence when I look at that. And look at the shooting star that we're getting over here on a weekly pattern. So pretty interesting type of look here in the weekly price action. Okay, let's take a look at Netflix. Okay, Netflix was down $22.51 on Friday, closing below that 10-day moving average in here. The other thing that really jumps out at me is the weekly candle, down $10.32 for the week. Again, a potential reversal type candle. We need to see follow through for that to happen. The interesting thing about Netflix, you'd be looking back into Here's January, February. You think, well, wow, we're way above our all-time highs. Well, we are, but that's not really the case, because the all-time highs, the prior all-time highs, were back here in June of 2018. We never got there. We never took out those highs in January, February this year. Not until April, with the whole stay-at-home movement and surge that we had in the stocks, that did Netflix punch above those June 2018 highs. All right, let's take a look at Alphabet. Alphabet down $78.56 on Friday, and for the week, the same kind of bearish looking type candle that we had in here. Notice how it was down $62.10. The interesting thing, this price action this week went slightly above the week 3 weeks ago, okay? And we basically closed this gap that we had over here. We almost closed it right almost to the penny, literally. And then we reversed back down, okay? So that's what happened here. These last 3 days, pretty devastating move. But Google, or I'm going to call it Google, has not punched above these February highs at this point. All right, so that's the picture on the FAANG stocks. There definitely was an attack on Fortress FAANG. We'll see what happens the next few weeks. All right, everyone, if you felt like the video was helpful, hit the thumbs up. If you're not a subscriber to the channel, hit the subscribe button. And again, if you'd like to have more of this kind of information on a regular basis, head on over to joehenches.net. Check out the website and the membership right there. All right, have a great weekend. Be safe, and we'll talk to you on the next video.